Pitbull is not just a story about making money. It is a story about pressure, fear, discipline, and survival. It is about what the market does to the human mind and what a determined person can do in return. This audiobook follows Martin Schwartz, a man who walked into Wall Street with hunger. He did not come from a powerful family. He did not have secret connections. He had desire, pain, and the will to win. You will hear victories that feel impossible. You will hear losses that feel unbearable. You will discover that trading is less about charts and more about character. If you think success comes from intelligence alone, this journey will surprise you. If you think courage means never being afraid, this journey will challenge you. Because the real opponent is not the market. The real opponent lives inside the trader. Now the story begins where every transformation begins. With a decision. With a plan. Let us step into Chapter 1. Chapter 1. The Plan. Pitbull opens at the moment a man decides he will no longer live an ordinary financial life. Martin Schwartz is ambitious, competitive, and tired of limits placed on him by salary and hierarchy. He wants independence. He wants to prove himself. He wants to win in the toughest arena he can find. Wall Street is not kind to dreamers. It rewards preparation and punishes hope. Very early he understands that excitement is not a strategy. Talent without structure will eventually fail, so he begins with something simple and powerful: a plan. The plan is not magic. It is not prediction. It is a framework for behavior when emotions rise. It tells him what to do when he feels fear. It tells him what to do when he feels greed. It tells him when to be aggressive and when to step back. He studies markets with intensity. He watches how prices move. He notices rhythm, momentum, hesitation. He sees that opportunity appears again and again, but only for the prepared mind. He also studies himself. He learns he loves action. He loves risk. He loves being right. And these strengths can quickly become weaknesses. The plan must therefore protect him from himself. He creates rules for entering trades. He creates rules for exiting trades. He decides in advance how much pain he is willing to take. When that line is crossed, he is out. No debate. No drama. This sounds easy when the market is closed. It becomes incredibly hard when money is moving and pride is involved. But he wants to be a professional, not a gambler. Professionals follow process. Gamblers follow emotion. Another part of the plan is financial survival. If he loses everything, the game ends. If he protects capital, he can fight tomorrow. Tomorrow is always the most important day. He realizes something many beginners ignore. Big success is built on many small, correct decisions. There is no single heroic trade that guarantees a career. Consistency creates reputation. While others chase excitement, he trains discipline. While others search for tips, he builds understanding. While others dream of shortcuts, he accepts the long road. The plan gives him confidence. Not because it promises profit, but because it reduces chaos. Win or lose, he knows why he acted. That knowledge creates strength. He is still afraid. Every trader is. But fear with structure is manageable. Fear without structure is deadly. He promises himself he will review mistakes honestly. He will not blame the market. He will improve, adapt, and return stronger. This attitude begins to separate him from the crowd. Many want rewards. Few want responsibility. The plan is responsibility written on paper. As Chapter 1 closes, the direction of his life has changed. He is no longer simply a man who wants money. He is becoming a man building a method. The battles, the fame, the fortune, and the pain will come later. For now, there is preparation. Because before the victories, before the headlines, before the legend, there must be one quiet commitment. Follow the plan. Chapter 2. Paradise Island. Martin Schwartz begins to taste what early success feels like. After the structure of the plan comes the sweetness of reward. Money starts to arrive. Recognition starts to grow. Doors that were once closed begin to open. For someone who fought hard to escape limits, this feels like arrival. It feels like the world finally saying yes. Trips become possible. Luxury becomes normal. Beautiful places replace crowded offices. The future seems wide and generous. Paradise is attractive. It whispers that the struggle is over. It suggests that discipline can rest for a while. But the market never moved to paradise. The market is still a battlefield. This is the conflict of the chapter. How do you enjoy success without becoming weak because of it? The author discovers that comfort changes perception. Risk begins to look smaller. Preparation begins to feel excessive. Confidence slowly becomes assumption. He notices that after wins, concentration becomes harder. The mind drifts. The hunger softens. Yet prices continue to move with the same brutality as before. The market does not care that you are happier now. He meets wealthy people who seem permanently relaxed. They speak casually about fortunes. They act as if money naturally belongs to them. It is easy to absorb this attitude. It is dangerous to absorb this attitude. Because trading is not ownership, it is performance. Every day you must earn your place again. He begins to understand a strange truth. Success creates new risk. When you have nothing, you fight hard. When you have something, you fear losing it. Fear of losing can be stronger than desire to win. So paradise carries hidden pressure. He asks himself difficult questions. Am I still sharp? Am I still studying? Am I still respecting the opponent? Sometimes the honest answer is uncomfortable. He sees other traders who rose fast and then disappeared. They celebrated too early. They believed the good times were permanent. The market removed them without emotion. This observation hits deeply. He does not want to be temporary. He wants durability. Durability requires maintaining the habits that built success in the first place. Wake early. Prepare carefully. Control risk. Stay humble. Simple ideas. Hard to practice when life becomes easier. Pleasure is not evil, but pleasure can distract. In paradise, the temptation is to believe you are special. If you believe you are special, you stop defending yourself. The author feels the pull of lifestyle. Nice hotels, nice food, important conversations. All of it is rewarding. All of it consumes mental energy. He begins to realize that energy is a trader's true currency. Without mental energy, decisions slow down. Instinct becomes dull. A dull trader is a vulnerable trader. So he experiments with balance. Enjoy, but not too much. Celebrate, but return to work quickly. Smile, but remain alert. It is not easy. Friends may not understand. They see wealth and assume permanent safety. They cannot see the constant tension behind performance. Inside, he knows the truth. Everything can change in a single day. This awareness prevents total relaxation. It keeps a small flame of seriousness alive. He reminds himself of the early days, the uncertainty, the desire to prove himself. He tries to keep that person alive even while his surroundings improve, because the hungry version of himself is powerful. Another lesson appears. The higher you climb, the more visible your fall. Public success brings public failure. The stakes feel larger now. Pressure grows silently. Instead of escaping difficulty, success has simply transformed it. Yet he would not go back. He prefers this challenge. At least now he has resources, knowledge, and experience. Still, he must not forget the foundation built in Chapter 1. The plan. Without it, paradise will become a trap. He watches the market with new respect. He understands that it loves to embarrass the comfortable. If he ever believes he has mastered it, he will be taught humility again. This thought keeps him cautious. Caution is survival. By the end of the chapter, paradise no longer looks permanent. It looks temporary, like a reward that must be defended daily. He sees that lifestyle is the result of trading, not the purpose of trading. If lifestyle becomes the purpose, judgment will suffer. So he makes another quiet promise. Enjoy the view, but never forget the fight. Because tomorrow morning, prices will open again. And the market will ask the same question it always asks. Are you still good enough? The answer must come from preparation, not memory. Paradise is beautiful, but discipline must travel with him wherever he goes. Chapter 3. The Great Pyramid. Martin Schwartz begins to understand that occasional success is not enough. Random victories cannot build a career. Luck cannot be trusted. Excitement cannot be repeated on command. If he wants durability, he needs architecture. So he imagines his trading life as a pyramid, wide at the base, strong in the middle, precise at the top. Every stone must support another stone. If one part is weak, everything above it is in danger. At the bottom stands knowledge. Knowledge of markets, knowledge of instruments, knowledge of how news, emotion, and liquidity interact. He studies relentlessly. Charts become language. Volume becomes information. Time becomes strategy. He watches how prices behave at the open. He observes how they react near the close. He pays attention to the way fear accelerates movement. He notes how hope slows decisions. Patterns begin to form in his mind. Not predictions, but probabilities. This foundation gives him orientation. Without it, he would be reacting blindly. Above knowledge stands experience. Experience is different from study. Experience is emotional memory. It is the feeling of heat when money is at risk. It is the sound of doubt when a trade moves against you. Books cannot give this. Only exposure can. He makes mistakes. Everyone does. But instead of hiding them, he examines them. Why did I enter? Why did I hesitate? Why did I ignore my own rule? These questions hurt, but they build strength. Each answer becomes another stone in the pyramid. He learns that improvement requires honesty without mercy. Excuses are comfortable, but they weaken structure. Gradually, experience begins to guide him faster than thought. He recognizes danger earlier. He senses opportunity sooner. What once felt chaotic now has shape. Above experience stands discipline. Discipline is the narrow top where decisions become action. Here there is no room for fantasy. There is only execution. When a stop is reached, he exits. When conditions are wrong, he waits. When size is too big, he reduces. This sounds mechanical, but it is deeply human, because emotions fight every order. Greed says stay longer. Fear says leave early. Hope says wait for recovery. Discipline answers with rules. Rules are not prison. They are protection. He realizes many traders build their pyramid upside down. They start with ambition. They skip preparation. They expect discipline to appear during crisis. It never does. Under pressure, people fall back to their true level of training. If training is weak, performance collapses. He refuses this fate, so he reviews daily. What worked? What failed? What signals were clear? What signals were confusing? Repetition turns learning into instinct. Another insight becomes important. The pyramid must be stable even during boredom. Great opportunities are rare. Between them lies waiting. If he forces action to escape boredom, he damages the base. Small, unnecessary losses erode confidence. Patience, therefore, becomes structural engineering. He also recognizes that the pyramid is personal. Another trader may build differently. What matters is internal consistency. You must believe in your design. Doubt creates hesitation. Hesitation is expensive. As confidence in the structure grows, anxiety reduces. Not because risk disappears, but because behavior is defined. Defined behavior creates clarity. He knows what he will do in many situations before they occur. Preparation shortens reaction time. Speed with control is power. Yet he remains cautious. Markets evolve. A rigid pyramid can crack. So adaptation becomes maintenance. Repair when necessary. Strengthen weak areas. Never assume permanence. He watches traders who enjoyed early glory but stopped learning. Their pyramids slowly decayed. When volatility returned, collapse was sudden. He refuses complacency. He wants a structure that can survive storms, rumors, crashes, and manias. Not perfect safety, but resilience. Resilience is the real goal. Because if he survives, opportunity will return. If he disappears, nothing else matters. By now he feels different from the man at the beginning of the journey. Less impulsive, more deliberate. Still aggressive, but calculated. The pyramid is changing him. It is teaching patience without removing ambition. It is teaching courage without removing caution. Balance emerges. He understands that mastery is not a moment. It is construction that never truly ends. Every day he adds stones. Every day he checks alignment. The process is demanding, but it creates pride. He is not gambling anymore. He is building. At the close of the chapter, the image of the pyramid stands tall in his imagination. A monument to preparation, a defense against chaos. Future chapters will test it. Pressure will shake it. Losses will attack it. But now there is foundation. And foundation turns survival into possibility. The higher he wishes to rise, the stronger he must build. Chapter 4. Ulrich Schwartz. Martin Schwartz now moves deeper into the culture of Wall Street. Up to this point, he has been building himself. Now he begins to understand the people around him. Trading is not done in isolation. It is performed in an ecosystem of personalities, egos, fears, and ambitions. In this environment, reputation becomes currency. The name Ulrich Schwartz represents image. It represents presence. It represents how a trader is perceived before he even speaks. The author becomes aware that success is partly internal and partly theatrical. You must know what you are doing. But others must also believe you know what you are doing. Confidence travels between people. Doubt does the same. He watches how strong personalities command rooms. They speak with certainty. They move with intention. They rarely show hesitation. Is it all real? Not always. But perception influences opportunity. If others think you are capable, they bring you business. If they think you are weak, they step around you. This realization is uncomfortable at first. He prefers numbers to performance. He prefers logic to image. Yet Wall Street is human. Humans respond to signals beyond data. So he studies behavior again, this time socially. How do leaders talk during chaos? How do veterans react to rumor? How do professionals carry losses without advertising pain? He absorbs these lessons carefully. He does not want to become fake, but he understands that emotional leakage can damage credibility. If panic shows on your face, others panic too. If you remain composed, stability spreads. Composure becomes influence. He begins experimenting with presence, standing straighter, speaking clearer, avoiding unnecessary words. Authority often lives in simplicity. He notices something powerful. When he behaves with control, he starts to feel more control. Action shapes emotion. The chapter explores identity. Who are you in the market? A beginner? A risk taker? A professional? You must choose, because the world will label you anyway. He chooses to be serious. Not loud, not dramatic, but focused. He wants people to associate him with preparation and execution. At the same time, he sees the danger of ego. A powerful image can trap you. If everyone expects brilliance, admitting uncertainty becomes harder. You might hold bad trades longer just to protect reputation. That is deadly. So he tries to balance external strength with internal honesty. In private, he remains a student. In public, he remains calm. This dual awareness becomes another layer of skill. Ulrich Schwartz symbolizes the crafted self, the professional mask that allows function under pressure. But the mask must serve performance, not replace it. He meets traders who fell in love with their own legend. They began defending identity instead of capital. The market destroyed them. This observation leaves a deep mark. He promises that if he must choose between being right and being solvent, he will choose solvency. Still, he cannot deny the satisfaction of recognition. When others respect him, motivation increases. Energy rises. Respect is fuel. But like any fuel, it must be handled carefully. Too little and confidence suffers. Too much and arrogance appears. Arrogance blinds. He keeps returning to the pyramid in his mind. Image sits above it, not instead of it. Remove the base, and nothing remains. Another lesson emerges. People follow perceived strength, especially in uncertain environments. If he wants leadership, he must radiate preparedness. Preparedness is quiet. It does not shout. He practices listening more than speaking. Information often hides in casual conversation. While others try to impress, he tries to understand. Understanding produces better decisions than performance. Yet performance helps open doors where understanding can be used. This paradox fascinates him. Wall Street is strategy layered on psychology, layered on communication. Mastery requires all three. By the end of the chapter, he feels older, even if time has not passed much. He sees the invisible rules that guide opportunity. He understands that success will require inner development and outer awareness. He is building not only a method, but a persona capable of surviving competition. The arena is crowded. Many are intelligent. Many are ambitious. Differentiation matters. If he can combine skill, discipline, and controlled presence, advantage appears. The journey becomes more complex now. No longer just trades, but relationships. Trust must be earned repeatedly. And trust can vanish faster than profit. He ends this stage with sharper perception. He watches faces, tone, posture. He measures confidence in himself and in others. Every interaction is data. Oryx Schwartz is not just a name. It is a reminder that markets are human theaters where psychology moves money. To survive, he must understand both numbers and narratives. The education continues. Chapter 5. Made to Trade. Martin Schwartz starts to confront a powerful question. Are traders created by training or born with something inside them? He looks at his own reactions to risk, the speed of decisions, the attraction to uncertainty, the strange calm that can appear in the middle of chaos. Part of this feels natural. Part of it has been built through repetition. He begins to believe that successful traders are shaped by both. Some personalities avoid pressure. Others move toward it. He clearly moves toward it. The noise of the floor energizes him. Fast movement sharpens his focus. Competition wakes him up. This recognition is important. If you choose a profession that fits your temperament, growth accelerates. If you fight your own nature, exhaustion follows. Trading, he realizes, matches the way he is wired. But instinct alone is not enough. Natural aggression without control leads to disaster. So the work continues. He refines routines. Morning preparation becomes sacred. He arrives mentally before he arrives physically. He wants no surprises that could have been anticipated. Preparation builds readiness. Readiness builds confidence. Confidence reduces hesitation. He notices how hesitation costs money. A few seconds can change everything. Therefore, he trains decisiveness. Not reckless action, but committed action. When criteria are met, he moves. He also accepts responsibility for outcomes. No blaming specialists, no blaming news, no blaming luck. Ownership strengthens maturity. If he wins, he studies why. If he loses, he studies why. Either way, he learns. This attitude begins to produce momentum. He feels himself transforming from participant into professional. Professionals think differently. They manage energy. They guard sleep. They respect limits. They understand that peak performance requires maintenance. He becomes aware of his emotional cycles. After big wins, he feels invincible. After losses, he feels doubt. Neither state is reliable, so he builds habits to stabilize mood. Routine reduces emotional swings. Another discovery arrives. Great traders love the process, not just the reward. If you love only money, frustration will dominate. If you love execution, satisfaction is available daily. He tries to fall in love with execution. Perfect entry, correct size, clean exit. Beauty exists there. This shift reduces desperation. Desperation leads to forcing trades. Forced trades damage accounts. Patience returns as a friend. Still, ambition burns strongly. He wants to be the best. Competition is everywhere. Talented people surround him. Instead of feeling threatened, he feels challenged. Challenge increases effort. He pushes himself harder. He reads more, observes more, reviews more. Fatigue appears sometimes, but so does purpose. Purpose makes sacrifice easier. Social life shrinks. Focus intensifies. He is aware that he is choosing this path deliberately. No one forces him. That freedom makes commitment deeper. He thinks about identity again. If he is made to trade, then trading must be treated with respect. You respect what defines you. Sloppy behavior would be an insult to the opportunity. He refuses to insult it. Fear does not disappear, but fear becomes information rather than command. If he feels unusual anxiety, he asks why. Is size too large? Is preparation incomplete? Adjustment follows awareness. Gradually, he trusts himself more. Trust is built through kept promises. Every time he follows a rule, trust increases. Every time he breaks one, trust decreases. He wants a strong relationship with himself. Because in critical moments, there is no committee. There is only decision. Decision must come from inner authority. He builds that authority patiently. By now, he senses momentum building in his career. Others begin to notice consistency. Opportunities expand. But he knows expansion increases complexity. He must grow skill at the same pace as responsibility. Growth without preparation leads to collapse, so he stays alert. Being made to trade is not a guarantee of success. It is an invitation to work harder than average. Talent sets the starting line. Discipline determines the finish. This understanding keeps him grounded. He respects veterans who survived many cycles. Survival impresses him more than flash. He wants longevity. To achieve longevity, he must remain a student forever. The market changes character. Strategies fade. Volatility shifts. Adaptation will be permanent. Yet beneath all change, certain principles remain. Risk must be controlled. Emotion must be managed. Preparation must be daily. These truths feel stable. He builds confidence around them. At the close of the chapter, a quiet conviction grows. He is in the right arena. The work is brutal, but meaningful. The pressure is heavy, but clarifying. Every day reveals more about the market and more about himself, and that discovery makes the journey addictive. He was not forced into this life. He chose it, and now he intends to master it. Chapter 6: Switch Hitting. Martin Schwartz now faces one of the most important transformations of his career. He must learn to operate in more than one direction. Many traders fall in love with a single identity. They want the market to behave in a way that fits their preference. They want prices to rise because buying feels optimistic. They want trends to continue because continuation feels comfortable. But the market is not built to satisfy preference. It is built to test flexibility. This is where the idea of switch hitting enters. If conditions demand aggression, he must be aggressive. If conditions demand caution, he must become cautious. If the opportunity is upward, he buys. If the opportunity is downward, he sells. No attachment, no loyalty, only probability. At first, this is emotionally difficult. Human beings like consistency. They like rooting for outcomes. Yet rooting clouds judgment. He realizes that survival belongs to those who can change stance quickly, without changing confidence. Changing direction does not mean confusion. It means awareness. He watches the best professionals. They reverse positions without drama. They do not apologize to yesterday's opinion. Yesterday is information. Today is decision. This attitude is liberating. He no longer needs to defend previous trades. He only needs to evaluate current conditions. Energy that once went into protecting ego can now go into analysis. He practices mental neutrality. If the market proves him wrong, he exits. If it proves him right, he presses. The simplicity is elegant. The execution is hard. Because pride resists reversal. Admitting error feels like weakness. But he begins to see that refusing to reverse is the real weakness. Flexibility is strength under pressure. Switch hitting requires preparation. He must understand both sides of movement. What makes buyers confident? What makes sellers desperate? Each force leaves signals. When he learns to read both, opportunity doubles. Instead of waiting only for rallies, he can benefit from declines. Instead of fearing bad news, he can use it. Fear transforms into strategy. This widens his world. He becomes less emotional about headlines. News becomes fuel for volatility rather than a reason for panic. Volatility is income for the prepared. He also discovers that being able to trade both directions reduces psychological stress. If he is long and the market weakens, he knows he can change. He is not trapped. Freedom reduces anxiety. Trapped traders make poor decisions. Free traders evaluate calmly. Another benefit appears. Objectivity increases. If he has no preferred direction, he can listen to evidence more honestly. Bias fades. The market becomes information instead of argument. He practices this daily. Sometimes he fails. Sometimes attachment sneaks back. But awareness catches it faster than before. Progress is visible. Colleagues notice he can adapt rapidly. Respect grows. With respect comes larger opportunity and larger responsibility. Size magnifies emotion. He must remain sharp. Switch hitting is not random movement. It is structured adaptation. He still uses rules. He still controls risk. Flexibility exists inside discipline. Without discipline, switching becomes chaos. He reminds himself of the pyramid. Adaptation must rest on foundation. During strong trends, it is tempting to relax. But trends end. When they do, reversal speed can shock the unprepared. He wants to be ready for that moment. Preparation includes imagining scenarios in advance. If price reaches this level, I change. If volume shifts, I change. Decision made early reduces panic later. He builds mental triggers. Over time, he becomes faster. Not reckless, but decisive. This speed creates advantage. While others debate, he acts. Yet he stays humble. Every reversal carries risk. Every adaptation can fail. Nothing is certain. What matters is the willingness to respond. He sees traders frozen by opinion. They watch losses grow while defending pride. He refuses paralysis. Movement is life in markets. He wants fluidity. Switch hitting also changes how he sees himself. He is no longer predicting. He is participating. Participation based on evidence feels cleaner. There is less storytelling, more observing. This reduces emotional exhaustion. By the end of the chapter, he feels expanded. His toolbox is larger. His mind is more open. Opportunity seems everywhere, not only in one direction. He understands that mastery requires letting go of attachment repeatedly. Attachment is comfortable. Comfort is expensive. Flexibility is uncomfortable, but profitable. He accepts the trade. Tomorrow he may need to change again. And he is ready. Because being a professional means serving reality, not preference. The market decides direction. He decides response. That partnership defines survival. Chapter 7. The Losing Streak. Martin Schwartz has built knowledge. He has built discipline. He has learned flexibility. Now he meets an opponent that ignores all preparation. A period arrives when trades simply do not work. Good entries fail. Careful analysis disappoints. Momentum disappears just when he commits. At first, he treats it as coincidence. Every trader experiences a few bad days. Stay focused. Follow the plan. But the days continue. Loss after loss begins to leave marks. Confidence, once strong, now flickers. Execution becomes slower. Second guessing enters. He starts asking dangerous questions. Have I lost my edge? Did the market change? Am I no longer capable? Doubt is heavier than financial loss. Money can be rebuilt. Belief is harder to repair. The chapter explores psychological erosion. Nothing dramatic happens in a losing streak. No explosion. Just repeated disappointment. The repetition is what hurts. He still prepares every morning. He still follows rules. Yet results refuse to cooperate. Frustration grows quietly. He watches others succeed while he struggles. Comparison increases pain. Why them and not me? This thought can poison discipline. Because jealousy pushes traders toward impulsive behavior. He feels the temptation to swing bigger, to recover faster, to force the market to respect him. But deep inside he knows that revenge trading destroys careers. He has seen it happen, so he fights himself. Instead of increasing size, he reduces it. Instead of trading more, he waits longer. This feels humiliating. But survival demands humility. He reminds himself that downturns are part of probability. No strategy wins every week. Still, living through it is brutal. Sleep becomes difficult. He replays mistakes repeatedly. Maybe I entered too early. Maybe I exited too fast. He searches for answers. Some mistakes are real. He corrects them. But many losses are simply the cost of doing business. Accepting this truth requires maturity. The mind wants explanation for everything. The market does not provide it. Uncertainty must be tolerated. During this period, he discovers the difference between amateurs and professionals. Amateurs quit. Professionals endure. Endurance is not passive. It is active control of behavior while confidence is low. He continues showing up. He continues following risk limits. Every disciplined day is a small victory, even if money is lost. This perspective keeps him stable. Another lesson appears. A losing streak tests identity. If you define yourself only by success, failure will destroy you. He begins to separate self-worth from daily results. I can be a good trader and still lose today. This sentence becomes powerful. It allows breathing space. Without it, panic would dominate. He also learns to communicate carefully. Public frustration can damage reputation. Calmness preserves trust. Inside, he may be worried. Outside, he remains controlled. The mask protects opportunity. He studies market conditions more deeply. Sometimes volatility shrinks. Sometimes trends vanish. In such environments, strategies suffer. Adaptation might be necessary. He reviews methods. He experiments cautiously. Small adjustments, never desperate leaps. Patience again becomes medicine. Days feel longer. Time slows under stress. But gradually, something subtle changes. He becomes tougher. Pain that once shocked him now feels familiar. Familiar pain is easier to handle. Resilience forms. He begins to trust that cycles turn. Not because of hope, but because history shows it. Markets breathe. Expansion follows contraction. If he remains alive, opportunity will return. This belief supports him during the darkest mornings. There are moments when he wants relief. A big win. A sign that the struggle is ending. Instead, he receives another small loss. He accepts it. Acceptance is strength. He keeps capital intact. He protects emotional stability. These are achievements, even if invisible. Finally, one day, a trade works. Not huge, but clean. Execution feels smooth again. Confidence lifts slightly. He does not celebrate wildly. He has learned caution. Recovery is fragile. He continues respecting process. More trades begin to cooperate. Momentum returns slowly. The storm weakens. Looking back, he realizes something important. The losing streak was education. It forced deeper discipline. It exposed emotional weaknesses. It strengthened patience. Without such periods, arrogance might have grown. Pain kept him honest. He understands now that careers are not built only on victories. They are built on behavior during defeat. Anyone can feel brilliant when winning. Few can remain professional while losing. He wants to be among the few. By the close of the chapter, he is still cautious, but stronger. The fear of loss has not disappeared, but it no longer controls him. He has walked through doubt and continued functioning. That experience becomes part of his foundation. Future challenges will come. They always do. But now he knows he can survive them, and survival in this profession is the greatest advantage of all. Chapter 8. Little Brown Bags. Martin Schwartz has survived losses and rediscovered rhythm. Confidence is returning, but now a different challenge appears. Success begins to change the environment around him. Money is no longer abstract. It has weight. It has presence. It moves through rooms and conversations in visible ways. The symbol of this change becomes the little brown bags. Cash, large amounts, carried physically. It is exciting. It is flattering. It is dangerous. Because when money becomes tangible, emotion intensifies. The numbers on a screen already affect the mind, but holding results in your hand can magnify ego. He feels pride. Anyone would. Hard work has produced reward, yet he senses a trap hidden inside celebration. The more attention money receives, the more discipline can fade. If focus shifts from process to lifestyle, vulnerability increases. He watches how quickly wealth can distort behavior. People become friendlier. Opportunities multiply. Invitations appear from everywhere. It feels good to be wanted. But he asks himself an uncomfortable question. Are they interested in me or in what I represent? The answer is not always pleasant. Money attracts orbit. Some of it is genuine. Some of it is not. Discrimination becomes necessary. He must protect time and energy. Too many distractions weaken preparation. The market still opens early. It still demands sharpness. No celebration changes that reality. He also notices internal changes. Spending becomes easier. Risk begins to feel lighter. This is dangerous psychology. If losses feel smaller because previous wins were large, control can slip. He refuses that path. He reminds himself that capital is ammunition. Without ammunition, the fighter is finished. Preservation remains priority. Another tension appears. How do you enjoy success while staying hungry? Hunger created progress. Comfort can reduce hunger. He tries to maintain ambition deliberately. He sets new goals, higher standards, better execution. Growth must continue, or decay will begin. The little brown bags are proof of ability. They are not proof of permanence. Markets can reverse quickly. He has seen legends disappear. Memory of those collapses keeps him cautious. He also learns about privacy. The more visible wealth becomes, the more expectations follow. People want tips. They want shortcuts. Refusing them can create tension, but giving them can create disaster. Responsibility grows heavier with reputation. He chooses careful communication, vague when necessary, direct when required. Trust is fragile. Meanwhile, he continues trading. The daily routine anchors him. Preparation brings familiarity. Familiarity brings stability. Without routine, the whirlwind of success might carry him away. He sees others caught in that wind. Late nights, loose decisions, rapid decline. He studies their mistakes like warnings written in real time. He does not want tragedy as teacher, so he tightens discipline further. Wins are reviewed with the same seriousness as losses. Why did this work? Can it be repeated? Was risk justified? Celebration must not replace analysis. He notices something subtle. Real professionals become calmer with money, not louder. Calmness signals confidence. Noise often signals insecurity. He prefers calm. The presence of cash also changes relationships at home. Family members react with pride and sometimes concern. They see volatility from a distance. They worry about sustainability. Their perspective reminds him of fragility. Outside the trading floor, people value stability more than excitement. This contrast keeps him balanced. He wants achievement, but not chaos. So he continues refining boundaries. Work is intense, but it must have limits. Without limits, burnout will arrive. He begins protecting recovery time. A tired mind makes poor decisions. Success should improve life, not destroy it. Yet he knows excess can creep quietly. Vigilance remains necessary. The little brown bags symbolize both victory and temptation. They prove competence. They invite arrogance. He wants the first without the second. That requires constant awareness. By the end of the chapter, he feels grateful but cautious. Gratitude prevents entitlement. Caution prevents disaster. He tells himself that the true goal is not just to earn money, it is to remain capable of earning money again. Ability must survive beyond any single period of success. If ability remains, opportunity will always return. This thought becomes grounding. The bags may come and go, but skill must stay. So tomorrow morning, he will wake up early. He will prepare again. He will respect risk again. Because discipline created the reward. Only discipline can protect it. Chapter 9. Going for the Gold 2. Martin Schwartz begins this stage of the journey with momentum again. The losses of the past have faded. Confidence has returned, but now it is different. It carries memory. He has won before. He has lost before. He knows both feelings can change quickly. This maturity creates a new ambition. He does not want ordinary success. He wants excellence measured against the very best. Going for the gold becomes the symbol of elite performance. Not luck, not survival. Mastery. But mastery demands intensity. He pushes preparation further than ever. Longer hours of review, sharper awareness of risk, deeper focus on timing. Small edges become important. If many traders are talented, advantage must come from refinement. He becomes obsessed with improvement. Where can execution be faster? Where can exposure be reduced? Where can opportunity be recognized earlier? Perfection may be impossible, but pursuit creates progress. He treats each trading day like competition at the highest level. Athletes train for moments. Traders must perform continuously. Endurance becomes part of greatness. He watches himself carefully for emotional leakage. Victory can make a person careless. He refuses carelessness. Instead, he converts confidence into concentration. The better he does, the more serious he becomes. Others might celebrate. He studies. Because he understands a brutal truth. At the top, mistakes are expensive. The margin between excellent and average is thin. He wants to stay on the excellent side. Pressure increases with recognition. When you are known, expectations grow. People assume continued brilliance. They watch closely. This can be uncomfortable. But he decides to use expectation as fuel rather than burden. If they expect greatness, I will work to deserve it. Responsibility becomes motivation. He also develops greater awareness of physical condition. Fatigue can destroy precision. So he guards energy more carefully. Sleep matters. Nutrition matters. Mental recovery matters. Performance is holistic. He can no longer rely on adrenaline alone. Another shift occurs. He begins thinking about legacy. If he is going for gold, he wants achievements that endure. Temporary glory fades. Consistent excellence builds history. He respects traders who lasted decades. Durability again appears as ultimate victory. Yet he still enjoys the thrill of competition. The opening bell still excites him. Opportunity still calls loudly. The difference is control. Emotion rises, but it does not dominate. He has become a manager of intensity rather than a victim of it. During winning periods, he remains alert for complacency. Complacency hides inside success like rust inside metal. Invisible at first, destructive over time, he keeps polishing habits. Review after close. Preparation before open. Honest assessment always. He continues reducing mistakes that once seemed small. Small errors accumulate. So do small improvements. Compounding works both ways. He chooses the positive direction deliberately. The pursuit of gold also forces him to confront fear of failure at a higher level. What if I fall from the top? What if expectations crush performance? These thoughts are natural. Instead of denying them, he studies them. Fear acknowledged becomes manageable. Fear ignored becomes explosive. He converts anxiety into preparation. If I prepare thoroughly, probability improves. He accepts uncertainty as permanent. Even champions lose sometimes. What defines them is response. So he builds recovery protocols in advance. If losses appear, reduce size. If confusion grows, step back. If clarity returns, press carefully. Structure provides comfort. He also recognizes that going for gold is not only personal. Teams, partners, and clients now depend on him. Their trust increases pressure, but also purpose. He wants to justify their belief. This responsibility matures him further. Selfish ambition transforms into professional duty. Duty stabilizes emotion. He is no longer trading only for ego. He is trading for reputation and reliability. These values feel heavier, but more meaningful. At times he misses the early simplicity. Trade, win, celebrate. Now complexity surrounds every decision. Yet he would not return. Growth requires weight. He carries it willingly. As performance improves, recognition widens. He becomes example for others. Younger traders observe him. They measure behavior. This awareness sharpens discipline again. Leadership means being watched at your worst moments. He intends to show control. By the end of the chapter, going for the gold no longer sounds glamorous. It sounds demanding. It requires sacrifice, constant learning, relentless honesty. But it also brings deep satisfaction. To know you are competing at the highest level with integrity is rare. He feels pride in the attempt, regardless of outcome. Because excellence pursued sincerely transforms character. And character, more than profit, determines longevity. Tomorrow the market will open once more. The competition will continue. He will arrive early, prepared again, still chasing gold, but wiser about its cost. Chapter 10. Sitting down by the lake waiting. Martin Schwartz reaches a level in his development where action is no longer the center of his identity. Readiness becomes more important than activity. This shift is profound. Earlier in his career, movement felt necessary. Doing something created the feeling of progress. Now he understands that forced action often creates damage, so he learns to wait. Waiting sounds passive. In reality, it requires enormous strength, because the mind hates emptiness. When nothing is happening, imagination begins to create opportunity. Small fluctuations look important. Noise pretends to be signal. If he follows every whisper, losses will multiply. Therefore, he practices stillness. The image of sitting by a lake captures this attitude. The water is quiet. You watch, you remain patient. When a real fish appears, you act instantly. But you do not throw the line every second. This metaphor becomes central to his maturity as a trader. He notices that the biggest opportunities often arrive after long periods of boredom. Those who exhaust themselves early are too tired to strike later. Energy management becomes strategy. He begins each day prepared to do nothing. Paradoxically, this readiness to stay inactive gives him power. He is no longer desperate for validation. He can let trades go. Missing a move is less painful than entering a bad one. This wisdom comes from scars. He remembers times when impatience cost him heavily. Memory strengthens discipline. Colleagues sometimes appear busy all day. Constant buying, constant selling. It looks impressive. But he has learned that busy does not mean profitable. Often it means anxious. He wants clarity, not noise. So he watches carefully. If conditions are mixed, he waits. If volatility is random, he waits. If information is unclear, he waits. Waiting protects capital. Capital is opportunity stored for the future. If you waste it today, tomorrow becomes smaller. This thought reinforces patience. He also realizes that inactivity provides perspective. When you are not trapped in positions, you can observe more objectively. Objectivity improves timing. Timing improves results. The market begins to look different to him now. Instead of a place demanding constant participation, it becomes a place offering occasional gifts. Your job is to recognize them. Recognition requires freshness. Fatigue hides opportunity. So he guards mental clarity fiercely. There are days when he barely trades. Earlier, this would have frightened him. Now it feels professional. He is paid for judgment, not motion. He also understands that patience creates psychological advantage. Others grow restless. They make mistakes. He conserves strength. When the true move begins, he is ready while they are recovering. This asymmetry is powerful. Waiting also builds confidence in another way. If he can resist temptation, he proves mastery over impulse. Each resisted urge is training. Training compounds. Gradually, discipline becomes natural rather than forced. He no longer argues with himself as much. Clarity arrives faster. Another change happens. He begins to trust silence. Markets do not need constant interpretation. Sometimes the best analysis is observation without conclusion. Let the story reveal itself. This approach reduces error. He becomes comfortable admitting he does not know. Not knowing is honest. Pretending to know is dangerous. From this honesty, better decisions emerge. When conviction finally appears, it feels solid. Action becomes decisive because it is rare. Rare actions carry weight. He commits with size when probability aligns. Because he has saved energy, courage is available. Patience, therefore, creates aggression at the right moment. This balance defines professionalism. He thinks again about earlier years, the excitement, the urgency. He smiles at the memory. Growth has replaced adrenaline with understanding. The thrill now comes from precision, not speed. Sitting by the lake is not laziness, it is preparation in disguise. By the time the fish appears, he has already decided how to act. Decision made early leads to clean execution. He feels a new kind of pride. He is no longer reacting to markets. He is responding selectively. Selectivity is power. It means he chooses his battles. And chosen battles are easier to win. Towards the end of the chapter, he senses deeper calm inside himself. The need to prove something every hour has faded. He trusts that opportunity will return. Markets are generous to those who are patient and cruel to those who are frantic. He prefers generosity, so tomorrow he will arrive prepared. He will watch carefully, and if nothing worthy appears, he will sit quietly. Because doing nothing is sometimes the most profitable decision of all. Chapter 11. Sabrina Partners. Martin Schwartz now steps into a different arena. Trading for himself demanded discipline. Managing money for others demands something more. Responsibility multiplies. When capital belongs only to you, pain is personal. When capital belongs to clients, pain becomes morale. Trust enters the equation. Sabrina Partners represents ambition at an institutional level. A structure, a promise, a public commitment to performance and professionalism. He is no longer simply a trader behind a screen. He becomes a steward of other people's dreams. This realization changes how he feels each morning. The weight is heavier. Clients expect competence. They expect protection. They expect growth. Expectations can inspire greatness or create fear. He chooses inspiration. To operate at this level, he must upgrade communication. Silence that once protected privacy can now create anxiety. Investors want clarity. They want explanation. He learns to translate market complexity into understandable language. This skill becomes critical because confidence from clients stabilizes capital. Stability allows better trading. Panic withdrawals force bad decisions. Therefore, trust must be cultivated continuously. He treats honesty as policy. If conditions are difficult, he says so. If risk is rising, he admits it. Short-term discomfort builds long-term credibility. He also understands that leadership means emotional containment. If he panics, others will panic more. Calm behavior becomes responsibility, not style. Internally, he still experiences doubt. Every professional does. But he processes it privately. Publicly, he offers direction. This separation is exhausting, yet necessary. Running a partnership introduces operational complexity. There are reports, legal requirements, administrative duties. Time once spent purely on markets is now divided. He must learn delegation. Trying to do everything himself would dilute performance. trusting others becomes another challenge. Just as clients trust him, he must trust his team. Mutual reliability builds strength. He chooses people carefully. Skill matters. Character matters more. A brilliant employee without integrity is risk. He refuses unnecessary risk. The partnership also amplifies visibility. Success will attract attention. Failure will attract more. He accepts scrutiny as part of growth. If you want influence, you must tolerate examination. This mindset reduces fear of criticism. Criticism becomes information rather than threat. He refines systems. Risk control becomes more formal. Procedures become written. Structure protects everyone. Improvisation still exists, but inside boundaries. Boundaries create safety. He remembers early days of individual trading. Freedom was total. Now freedom is balanced by accountability. He does not resent this. He respects it. Maturity means understanding consequences beyond yourself. Another emotional layer appears. When he wins, clients celebrate. When he loses, clients worry. Their reactions affect him deeply. He wants to deliver not only returns, but peace of mind. Peace of mind may be impossible in markets, but effort toward it builds loyalty. He communicates process repeatedly. We protect first. We seek opportunity second. Repetition builds belief. Over time, he notices a transformation in himself. He is thinking more like a guardian and less like a fighter. Guardianship does not reduce ambition. It refines it. He still wants exceptional performance, but not at reckless cost. Longevity becomes priority. Short bursts of brilliance cannot sustain partnerships. Consistency is king. He builds culture around this principle. Team members know expectations clearly, prepare, respect risk, stay humble. Simple ideas, powerful effect. There are difficult conversations too. Sometimes clients misunderstand volatility. Sometimes they expect certainty. He explains patiently that certainty does not exist. Probability is the language of markets. Those who accept it will stay. Those who need guarantees will leave. He cannot control that. He can only control integrity. As Sabrina Partners grows, pride grows with it. He built something larger than himself. Yet pride must remain quiet. Loud pride invites carelessness. He continues reviewing trades with intensity. Leadership does not grant exemption from discipline. If anything, it demands more. People are watching. Example becomes powerful teaching. He wants his behavior to inspire confidence. There are nights when responsibility feels overwhelming. He lies awake thinking about risk, clients, markets. But beneath the worry is meaning. He is doing work that matters. That knowledge provides strength. By the end of the chapter, he recognizes that success has evolved. Earlier, it meant personal victory. Now it means collective trust. Both are valuable. But the second requires deeper character. He is still a trader, but he is also a leader now. And leadership changes everything. Chapter 12. How's my money doing? Martin Schwartz discovers that one simple question can carry enormous emotional weight. How is my money doing? Clients ask it politely. Friends ask it casually. Family members ask it with hope. But behind the words lives anxiety. The question is never just about numbers. It is about security. It is about trust. It is about the future people imagine for themselves. Now that he manages outside capital, this question follows him everywhere. At dinners, in meetings, on the phone. Sometimes it arrives when markets are calm. Sometimes it arrives when volatility is intense. The timing can change how it feels in his chest. If performance is strong, the answer is easy. Confidence flows. But when results are mixed or temporarily weak, the question becomes heavier. He wants to be honest. He also wants to be reassuring. Balancing truth and comfort requires skill. He learns that communication is part of risk management. Clear explanation reduces fear. Silence magnifies it. So he speaks openly about process. We follow rules. We limit damage. We wait for high probability. Repetition again becomes tool. Investors who understand method are more patient during drawdowns. Education stabilizes relationships. Yet he also realizes that no explanation removes emotion completely. Money is personal. Loss can feel like betrayal, even when it is temporary and controlled. He must accept this human reality. He cannot demand perfect rationality from others. So empathy becomes important. He listens carefully to concerns. He answers with respect. Defensiveness would destroy trust. He avoids arrogance. Past success does not guarantee future performance. Humility keeps dialogue healthy. There are moments when he feels misunderstood. He wants clients to see the discipline behind decisions. But outsiders often see only outcome. This can be frustrating. Still, he remembers that responsibility belongs to him. If someone trusted him with savings, he owes patience in return. He begins building systems for regular reporting. Transparency becomes habit. When people know what is happening, rumors lose power. Rumors thrive in darkness. Light reduces them. He also learns to manage his own emotional reaction to the question. If he becomes tense, conversation becomes tense. Calm tone creates calm response. Leadership again reveals itself as emotional regulation. Another realization emerges. Sometimes clients ask the question, not because they doubt him, but because they need connection. They want to feel involved. Including them strengthens partnership. So he makes space for discussion. He explains market environments. He explains why certain periods are difficult. Understanding builds resilience. Yet even with preparation, there are days when calls arrive one after another. Market declines. Headlines scream. Fear spreads quickly. He must become anchor. He repeats principles. We protect first. We remain disciplined. Panic is not strategy. These words are not magic, but they provide stability. He senses how much people rely on him. This realization deepens commitment. He cannot afford emotional collapse. If he falls apart, many others will follow. So he strengthens routines even more. Preparation every morning. Review every evening. Structure reduces anxiety. The better prepared he is, the more confidently he can answer the question. How is my money doing? Sometimes the answer is positive. Sometimes it is temporarily painful. But it is always honest. Honesty becomes brand. Over time, clients begin to appreciate this reliability. They may not love every month, but they respect integrity. Respect builds longevity. He also confronts the reality that some investors will leave during hard periods. This hurts. But he understands that alignment matters. Not everyone can tolerate uncertainty. Those who stay become stronger partners. Shared experience creates deeper trust. Through these interactions, he grows emotionally. He becomes more patient, more understanding. He sees markets not only as numbers, but as forces affecting human lives. This perspective changes motivation. Profit remains important, but stewardship becomes equally powerful. He wants people to sleep at night. If they sleep, he has done part of his job. By the close of the chapter, he realizes that the question he once feared has become familiar. It still carries weight, but he can carry it now. Experience has built capacity. Tomorrow someone will ask again. He will answer calmly, because leadership is not avoiding difficult questions. It is standing steady while answering them. Chapter 13. Sorry, Dad. You're fired. Martin Schwartz reaches one of the most emotionally complicated moments of his professional life. Until now, the struggles were mostly about markets, discipline, and clients. Now the challenge becomes personal. Family and business collide. In earlier years, support from loved ones felt like fuel. Encouragement provided courage when uncertainty was overwhelming. But as responsibility expanded and Sabrina partners matured, roles changed. Expectations became professional rather than sentimental. The firm required performance, clarity, accountability. Relationships built on affection suddenly had to survive evaluation. This is never easy. Working with family can feel natural at first. Trust already exists. Communication seems simple. Yet when money, reputation, and external investors are involved, standards must be consistent. Special treatment damages culture. If one person is protected because of relationship, others will notice. Resentment grows quietly. Confidence in leadership weakens. He begins to see tension forming. Loyalty to family pulls one direction. Loyalty to the organization pulls another. Both feel valid. Choosing between them creates pain. He delays the decision as long as possible. Maybe circumstances will improve. Maybe performance will recover. Hope can be comforting. But leadership cannot rely on hope alone. Eventually, clarity arrives. For the health of the partnership, change is necessary. No dramatic fight, no explosion. Just a quiet recognition that roles are no longer aligned. The conversation he must have feels heavier than any trade. Markets are impersonal. This is intimate. He prepares carefully. He reminds himself of fairness, of responsibility to investors, of responsibility to employees who depend on stable management. Avoiding action would be easier emotionally, but harmful professionally. So he chooses difficulty. Saying the words hurts. Sorry, Dad. You are fired. Inside those words live years of history. Gratitude, love, shared struggle. None of it disappears. But the organization must come first in this moment. He worries about damage to the relationship. He worries about regret. Leadership often requires stepping into uncertainty beyond markets. He speaks with respect. He explains reasoning. Not accusation, but necessity. The pain is visible. There is no way to make it comfortable. After the conversation ends, silence remains. He feels both relief and sorrow. Relief because clarity has returned. Sorrow because clarity demanded sacrifice. He wonders if he has done the right thing. Doubt visits again. But he knows that protecting fairness is essential. If he compromises principles once, future decisions become impossible. Culture would weaken. He cannot allow that. In the following days, he watches reactions inside the firm. People understand more than he expected. Some even respect the decision deeply. They see that no one stands above standards. Trust in leadership strengthens. Yet emotional residue remains within him. He reflects on how success complicates life. Early ambition was simple. Work hard. Win. Now consequences ripple through relationships. Power carries responsibility far beyond numbers. He accepts this truth slowly. He also learns that love and professionalism can coexist, but boundaries are necessary. Without boundaries, confusion replaces respect. He hopes time will heal wounds. He reaches out privately. He maintains connection. Family must survive business. He refuses to lose both. This balance requires patience and humility. There are moments of guilt. He questions himself repeatedly, but he returns to first principles. He was entrusted with other people's capital. He must honor that trust. The decision, painful as it is, supports integrity. Integrity is the foundation of everything he has built. Without it, nothing stands. As days pass, he feels steadier. The firm continues operating. Markets continue moving. Life does not stop for emotional upheaval. Responsibility demands presence. He shows up every morning. He prepares. He trades. Routine becomes therapy. Work provides structure when feelings are chaotic. He begins to understand that leadership maturity includes accepting permanent discomfort. There will always be someone unhappy. Trying to please everyone leads to paralysis. He must act according to values, not popularity. This realization strengthens resolve. He sees himself changing again. Harder perhaps, but also clearer. Clarity allows forward movement. By the end of the chapter, he feels older in spirit. He has crossed a line from ambition to stewardship. Personal sacrifice has become part of responsibility. He does not celebrate this, but he accepts it. Tomorrow he will continue building. And he will carry the memory of this decision as a reminder. Success demands courage not only in markets, but in relationships. Chapter 14. Night Fighting. Martin Schwartz discovers that the market does not always close when the bell rings. Prices may stop moving, but the mind continues trading. Night becomes another arena. During the day, action is immediate. You respond, You execute. At night, there is space. And in that space, imagination can grow louder than reality. What if tomorrow opens against me? What if unexpected news arrives? What if I missed something important? Questions multiply in darkness. Fatigue makes them heavier. He lies awake reviewing positions again and again. Entry points, risk levels, possible scenarios. The brain searches for certainty. Certainty refuses to appear. This is night fighting. There is no opponent you can see, only internal voices. Some voices are rational. They remind him of preparation. Others are emotional. They predict disaster. Learning to manage these voices becomes essential. Without sleep, judgment deteriorates. A tired trader is vulnerable before the market even opens. So he must find a way to rest while uncertainty still exists. This feels almost impossible at first. Responsibility makes relaxation seem irresponsible. If I stop worrying, something bad might happen. But endless worry does not prevent risk. It only destroys recovery. He slowly accepts this logic. Preparation has been done. Stops are defined. Plans exist. Beyond that, obsession adds no value. Understanding this intellectually is easy. Feeling it emotionally takes time. He experiments with routines, reading, exercise, quiet conversation, anything that gently pulls the mind away from repetitive fear. Some nights it works, some nights it fails. When it fails, he practices another skill. Acceptance. Markets are uncertain. Tomorrow may bring pain. This truth cannot be eliminated. Fighting reality wastes energy. Accepting reality conserves it. Acceptance allows sleep to arrive more often. He also notices something interesting. Many fears imagined at night never happen. The mind exaggerates probability under stress. Remembering this helps him regain perspective. He begins keeping mental score. How many disasters truly occurred compared to how many were imagined? The difference is enormous. This knowledge weakens panic gradually. Still, responsibility never disappears. Large positions create real exposure. He must respect risk while refusing paralysis. Balance again becomes theme. He also learns to forgive himself. Perfection is impossible. If tomorrow brings loss despite preparation, that is part of the profession. Self-punishment will not repair it. Energy must be saved for response. This attitude reduces pressure. He becomes kinder internally, without becoming careless. Kindness and discipline can coexist. As experience grows, night fighting changes character. Earlier it was terror. Now it is conversation. He listens to concern, checks logic, then lets it pass. The process becomes faster. Confidence is not absence of fear. It is ability to function while fear speaks. He realizes veterans have mastered this art. They rest because they know they can act tomorrow. Skill creates permission to sleep. He wants that permission, so he continues strengthening ability daily. The stronger he becomes, the quieter nights feel. Not silent, but manageable. There are still evenings before major events when tension returns sharply. Big risk always wakes the mind. On those nights, he reminds himself why he chose this life. Challenge gives meaning. Comfort alone would never satisfy him. This perspective transforms anxiety into purpose. Purpose softens fear. He also speaks with other professionals. He learns he is not alone. Everyone fights at night. Knowing this reduces isolation. Shared struggle builds solidarity. Gradually, he develops trust in morning. Whatever happens, he will handle it. This belief becomes anchor in darkness. Eventually, sleep returns more consistently. Rest improves performance. Better performance increases confidence. Confidence reduces night fighting further. A positive cycle begins. By the end of the chapter, he understands that mastery of markets requires mastery of mind beyond trading hours. The unseen battles are as important as visible ones. If he wins at night, he arrives stronger in the morning. And strength at the open is priceless. Tomorrow, uncertainty will return, but he will meet it rested, prepared, and steady. Chapter 15. The Best Trade. Martin Schwartz has experienced ambition, fear, growth, responsibility, and sacrifice. He has fought in markets and within himself. Now he begins to understand that the meaning of a great trade is changing. Earlier in his career, the best trade meant the most money, the biggest win, the most dramatic day. Profit defined greatness. But time and experience reshape that definition. He has seen huge gains followed by painful losses. He has seen brilliant calls ruined by poor risk control. Money alone cannot measure quality. A truly great trade must include process, discipline, timing, and emotional control. It must be repeatable. Repeatability separates luck from skill. He reviews moments in his career that still stand out, not always because of size, but because of clarity. Times when preparation aligned perfectly with action. When he saw the opportunity early. When he acted without hesitation. When he managed risk precisely. Those memories give deep satisfaction. They feel clean. No regret. No second guessing. Just execution. He realizes that the best trade is one that strengthens confidence in method. After such a trade, he trusts himself more. Trust compounds like capital. With greater trust, future decisions become smoother. He also understands that sometimes the best trade is the one not taken. Walking away from temptation can save enormous damage. In the past, he might not have valued restraint. Now he respects it deeply. Restraint requires maturity. Anyone can act. Few can wait. He remembers days when he preserved capital by refusing mediocre setups. Those invisible victories built longevity. Longevity now feels more impressive than excitement. He wants a career measured in decades, not moments. This perspective transforms ambition. Instead of chasing dramatic stories, he builds stable foundations. He still enjoys winning. He still feels adrenaline. But emotion no longer dictates behavior. Control does. He begins teaching younger traders something he learned painfully. If you survive, opportunity returns. If you disappear, nothing returns. Survival is the platform of greatness. The best trade, therefore, is one that protects survival while capturing opportunity. Balance again. Too much aggression destroys. Too much caution paralyzes. Mastery lies between. He feels gratitude for earlier hardships. Losing streaks, sleepless nights, difficult conversations. They shaped judgment. Without them, he might have confused luck with talent. Pain clarified truth. He also notices emotional evolution. He is less interested in proving himself to others. He is more interested in living according to principles. External approval fades. Internal alignment grows. This change brings peace. Peace allows clearer thinking. Clear thinking improves performance. Performance strengthens peace. Another positive cycle. He recognizes that markets will continue challenging him. No final victory exists. The goal is ongoing competence, daily recommitment. He accepts this rhythm. There will always be another test. But he now trusts his preparation. He trusts the pyramid he built years ago. Knowledge, experience, discipline. They remain reliable companions. When he thinks about legacy, he does not think first about wealth. He thinks about reputation for integrity. Did he treat risk seriously? Did he communicate honestly? Did he respect clients? These questions matter. A career built only on profit can vanish quickly. A career built on character endures. The best trade, therefore, includes ethics. How you win matters. He has seen fortunes made through recklessness. They rarely last. He prefers durability. Durability demands humility. The market is bigger than any individual. Forgetting this invites punishment. Remembering it keeps perspective. Toward the end of the chapter, he feels something unexpected. Contentment. Not satisfaction that ends ambition, but appreciation for the journey. He has become someone capable of operating under enormous pressure. That transformation is achievement. Money was catalyst. Character is outcome. He smiles at the younger version of himself who believed victory meant domination. Now he understands it means partnership with reality. Listen, prepare, act, protect. Simple words. Lifelong practice. Tomorrow there will be another opportunity. Maybe it will be large, maybe small. If he follows process, it can be the best trade again. Because the best trade is not a single event. It is any decision where discipline defeats impulse, and those opportunities appear every day. Chapter 16. The Pit Bull's Guide to Successful Trading. Martin Schwartz closes his journey by stepping back from stories and offering distilled principles. Battle experience becomes guidance. This is not theory. It is survival knowledge earned under pressure. He begins with a foundation that overrides all others. Protect capital. Without capital, there is no second chance. Without survival, there is no recovery. Every decision must respect this truth. Aggression is valuable, but only after protection is secured. He advises traders to think like professionals, not gamblers. A gambler asks, "How much can I win?" A professional asks, "What happens if I am wrong?" This shift changes everything. When risk is defined clearly, fear becomes manageable. Undefined risk creates panic, so define it in advance. Where will you exit if the idea fails? How much size is appropriate? Answer before entering. Preparation removes drama. Next, he speaks about discipline. Rules are useless if they are ignored during emotional moments. Write them. Study them. Follow them, especially when it hurts. Pain often signals growth. If you can exit a losing trade quickly, you are already ahead of many participants. Ego resists small losses. Ego prefers large disasters disguised as hope. Choose humility instead. He reminds traders that markets are always uncertain. Waiting for certainty means permanent inactivity. The goal is probability, not perfection. Learn to operate in shades, not absolutes. Another principle stands out strongly. Trade what you see, not what you think should happen. Opinion is seductive. Reality is decisive. If the market disagrees with you, listen. Fighting price action is expensive. He also emphasizes emotional awareness. Notice when you are tired. Notice when you are angry. Notice when you want revenge. These states distort judgment. When awareness rises, reduce size or step aside. There is no shame in not trading. Preserving clarity is victory. He talks about preparation again, almost obsessively. Morning work builds afternoon confidence. Review charts. Understand context. When opportunity appears, hesitation disappears. Prepared minds act faster and cleaner. He encourages constant learning. Markets evolve. Old patterns fade. Curiosity keeps edge alive. Arrogance kills curiosity. Remain a student forever. Another powerful lesson concerns independence. Advice from others can be helpful, but final responsibility is yours. If you follow someone blindly, you will blame them later. Ownership creates maturity. He learned this through mistakes. Taking responsibility is heavy, but liberating. He also discusses size. Large positions amplify emotion. Increase gradually as confidence in method strengthens. Jumping too fast leads to paralysis. Comfort at each level must be earned. He warns about lifestyle inflation. Success can create pressure to maintain image. Image should never dictate risk. Return always to principles. The market does not reward appearance. It rewards execution. He explains that boredom is normal. Most of trading is waiting. If you need constant excitement, you will manufacture bad trades. Patience is competitive advantage. He returns again to resilience. There will be losing streaks. They are unavoidable. What matters is behavior during them. Reduce size. Stay disciplined. Keep learning. Confidence will rebuild through action, not wishing. He urges traders to build routines outside markets too. Health supports clarity. Relationships provide balance. A life completely consumed by trading becomes fragile. Stability outside helps stability inside. He reflects on identity. Do not define yourself only by profit. If results determine self-worth, emotional swings will dominate. Define yourself by adherence to process. Process can be controlled. Outcome cannot. This philosophy brings calm. Calm improves performance. He also reminds listeners that greatness is gradual. There is no sudden transformation into mastery. Small improvements repeated daily create distance from the crowd. Consistency compounds. Toward the end, he speaks with warmth rather than intensity. Experience has softened urgency into wisdom. He wants others to avoid unnecessary pain. Yet he knows some lessons must be lived personally. Still, guidance can shorten suffering. He summarizes everything into a rhythm. Prepare carefully. Act decisively. Control risk. Review honestly. Repeat. Inside this repetition lies career. He feels gratitude for markets. They were harsh teachers, but fair. They punished arrogance and rewarded discipline. They revealed character. Without them, he might never have discovered his own strength. As he closes, he leaves listeners with responsibility. Knowledge alone will not save you. Application will. Tomorrow the bell will ring. Fear will appear. Greed will whisper. Remember principles. If you follow them, you have a chance. If you ignore them, the market will educate you again. The choice is always yours. And that is both the burden and the privilege of being a trader.